Let's start with the good news. The confidence level of the Indian consumer is showing some signs of recovery. According to the CNBC TV 18 Boston Analytics Consumer Confidence Index, confidence levels have turned marginally positive. That's on the back of improving consumer perception. So on What's Hot Tonight, we ask, is this the signs of an early recovery? Earlier, I caught up with Venu, Srinivasan, President of CII and Chairman and Managing Director of TVS Motor Company, Sunil, Munjal, former President of CII, and Bhartia, the current Vice President of CII, and began by asking Venu Srinivasan if what he was actually seeing could be termed as a turnaround, or was it a case of perception bottoming out?
No, there is a reversal. I think we bottomed out probably around February. Since March, we have been seeing consumer sentiment go up. And it is better in rural areas, as you indicated, because of better harvests. But even the urban employment situation is better. We hit the worst in probably January and February.
Okay, so how much more do you actually see in terms of the trend strengthening, or is this a mere blip at this point in time?
I think it will slowly strengthen, and from September we expect it to really see a substantial increase. That's my opinion, at least.
Okay, September, a substantial increase. Bhartia, let me ask you, how much does this actually have to do with what we're seeing globally as well? Because if you look at what is happening with the global markets, whether it's equities or commodities, we are seeing a strengthening as far as the equity markets are concerned. Commodity prices have eased. Consumer confidence seems to be picking up even in beleaguered markets like the US. How much are we actually tied in with what's happening globally?
I think the connection of Indian revival with the global economy is, I would say, limited as of now, because US recovery is still slow, Europe is still slower. Of course, we are starting to see recovery in China from February, March onwards. Actually, in March, China was almost, in the industrial side, was showing almost 100% of what it was before September. So I would say the Indian revival is more driven by the local consumers, mainly. Industries which are related to exports, especially which are mainly for the consumers in the developed markets like US or Europe, I think still we have to wait. We have to wait and see.
But what is the biggest change on the ground? And let me put that question to both of you before I actually toss this to Mr. Munjal. What has been the biggest change that has helped us to see this revival, whether it's in consumer spending or in consumer confidence? Let me start with you.
First is contraction of inventories, which are taking place in the West, bottomed out by February, March. I think therefore exports were affected less after March. Secondly, India itself, I think thanks to all the stimulus that has been given by the government, consumer confidence started improving, loans started improving for cars and durables, and the combination has resulted in growth from a negative 15% for motorcycles and negative 25% for cars in December. It's come up to 5%, 3% growth. So I think it is certainly physical and not just sentiment.
In terms of banks actually getting into the market and lending more to the consumer, we've seen the government nudging banks to do so gently and then perhaps even not so gently in the recent past. But what is your expectation now in terms of interest rates coming down further? We've seen the monetary action, we've seen what's happened in the credit policy. How hopeful are you that we're going to see further rate cuts?
See, interests have certainly eased, but the expectation is in the next 3 months it has to ease much more. The bond rates are still high, so banks are not really cutting down on interest rate. While there is a pressure to lend more, but the rates have to come down. And I think that's where banks are moving. It will take time because the savings rate are still high. I think overall we need to cut down rates across the board.
Okay, Sunil, Munjal, what makes you bullish at this point in time? We've heard from both Mr. Srinivasan and Mr. Bhartia about a couple of things that have changed things on the ground, but to your mind, what gives you reason for hope? What gives you reason for optimism?
I would say cautious optimism right now, Shireen. One is, if you look at the global situation, you still get mixed signals. If you look at what Rubini said the other day, saying this issue of green roots in the world economy is a bit premature. We will see further contraction in the global economy, and that's almost certain. You can see the signs in Japan, Europe, US, and Hari talked of this a little bit earlier too. However, the president of Fidelity, for example, has said we have already bottomed out and started to see improvement. The broad view is the deleveraging is going to take at least a year, if not longer, in the global market. So to that impact, wherever India is affected by global economies, we can expect to take some time still for any improvement to take on there. However, within the local economy, we are clearly seeing signs of improvement. It's not all around. It is patchy and it's in some sectors. Steel has improved. Cement has continued to stay strong. Infrastructure is showing improvement. Road construction has improved. But there are still sectors of the economy which are struggling and doing quite badly. So we are I think in some sense, I don't know if we're fully bottomed out, but clearly there is an improvement in the sense of confidence that consumers have. And certainly in industry, there seems to be some more stability. Yet what we need is a much more stable policy environment. Therefore, our hope is now pegged on the new government that comes in and their ability to take quick decisions on a number of issues which are pending.
All right, let me put that question to you, Venu Srinivasan, because we were talking about politics just a short while ago now. In terms of the possibility of an increasingly fractured mandate, that is what everybody is adjusting to at this point in time. You're hopeful that we are actually going to have a stable government in place with one of the national parties, whether the BJP or the Congress, actually pulling in a little more than 160?
I'm fairly confident you will have a coalition which is anchored by one of the two parties. And whether they'll get 160 or 150, I don't know. And secondly, I think coalition politics has gone on for quite some time. There will be a common minimum program. And therefore, I'm reasonably confident that India will still come through it reasonably well.
But in terms of priorities now, whether it is the UPA in a new avatar or the NDA in a new avatar, the possibility of the third brand at this point in time, fairly low. But if it were to be either of these two parties, the consensus is that the broad economic direction in terms of reforms will continue. But in terms of priorities, what to your mind needs to be done as soon as the government comes into power, perhaps even as soon as the budget is announced?
I think the first is to reduce interest rates further. That is the expectation that we have as inflation is going down, and CPI will follow the WPI down, in our opinion.
Do you think that is why only a 25 basis point cut in the monetary policy is saving room for another 25 basis point cut, or perhaps even more than that?
We hope so. Second, I think monetization of the deficit is high on our priority. Otherwise, with the government slated to borrow 3,60,000 crores, and depending on our $10 billion contribution to the Monetary
IMF
Fund, which you talked about, IMF, would add another 50,000 crores to it, there will be no space for corporates to borrow or for the banks to lend. And therefore, that will be the second biggest priority.
There will also then be no room for any additional big bank stimulus measures.
We do not expect any big bang stimulus measures. I don't think we're asking for it, given the fact that our fiscal deficit is already high. What we're now asking is just stable
corporate India
economic
is
policy.
pruning its wish list down?
No, I think in the last CIA press conference in Mumbai, we explained that we don't think there is enough headroom for the government to spend their way out of trouble because fiscal deficit is high. What we now need is interest rates to come down and simplification of taxes, general goods and service tax, GST, to come across India.